All right, welcome everyone to episode 3 of the Ninja Wealth Exchange here. So let me end the music here. So last week we talked about how realtors make their wealth. And so this week we're going to be talking about the other side, which is loan officers, right? So, everybody already kind of knows basically how realtors make their money, which is through a percentage of the purchase price, right? But the more mysterious part is, how do loan officers exactly, build their wealth, make their income, right? And so today, my co-host here, Johnny, he's got 20 plus years in the lending industry, so nobody else better to ask than Johnny. So Johnny's this week. Johnny's on the hot seat, so I'm going to be asking him a ton of questions about the loan officer world. And so, as you know, Johnny's also a realtor. And if you joined us in episode 1, you know that I'm also a loan officer and realtor as well. But we did this. We had a different process, right? He became loan officer first, and then the realtor, where I became the realtor first, and then the loan officer. So we have slightly different perspectives on this topic here. And so let's bring Johnny in here. Johnny, anything you want to say before we start off?
Yeah. So let me talk a little bit about how I ended up where I was at. So initially, I started out in the mortgage industry, just shoveling paper around. Was called the mortgage assistant and worked and assisted the processors. Right, they, back in the days, we used to have files. Right, we used to have actual files, and we used to actually put the files together. We would have these big old stickers with names of borrowers and so on. We don't quite do that anymore. Everything's digital now, but and that's how it began. And eventually I moved into, the underwriting scene. Went from the assistant to becoming a processor, to becoming an underwriter, to become a manager that managed underwriters. And so that was prior to moving into becoming a loan officer. And when I moved into a loan officer, it just became like super easy, right? It was could you talk to clients? Could you coach them? Could you get them into a position? And I think before we had talked about it a little bit, and I think the amount of transactions I've done, like because I was with large institutions, it was just ridiculous. Like I think we were doing in the early 2000s, we were putting together files and we were closing like 60 loans a month, um, which is ridiculous. Like I don't even think that's possible nowadays, but that's what we were doing. And so these days, when I became a loan officer, I did, up to 200 transactions a year. It's pretty rough when you're doing that much transactions, but the more you do, the more experience you gain and the more you can help your clients, right? So yeah, that's pretty much the gist of it. Now I own my own brokerage called Win-Win Financial, and I've been running that for almost 2 years now. And it's been going really, really well.
Awesome. So before we start off with your the fun stuff, can you share a little bit, what does a loan officer actually do? I mean, do you just push papers around? Is that what you do?
That's what everybody thinks, right? That's what everybody thinks. We actually analyze a bunch of different things, right? So when a transaction comes in, we get all, we're going to be collecting some of your private information, such as pay stubs, W-2s. We're going to be looking at your income to see, where your debt to income ratio is. So of course, calculation and analysis around that, in addition to taking a look at your credit report, seeing if you have any collections or, student loans that you currently are deferred. We're going to be looking at those things. We're going to be looking at, everything that's listed on the credit report, of course. And then we're going to be looking at, how much assets do you really have? Do you have the down payment to be able to afford this house? And then off of those things, right? That's the very beginning of the process, just to get you pre-approved. We look at those things to see and determine whether we can get you pre-approved. And whether you qualify for it. Because of course we don't want to overextend any one of our clients, right?
Got it. Okay. So, me being already a realtor, working with a ton of loan officers, and every transaction basically, right?
Mhm.
Um, unless it's a cash, right? That we don't need you guys. Um, but it's always been a little bit of a mystery, right? Um, how do loan officers get paid, right? So sometimes, as a realtor, we'll see the CD, right? The closing disclosure.
Mhm.
So that's like the final breakdown of, the customers, the buyers loan, right? What does it cost to get that loan? What's the interest rate? Blah, blah, blah. Everything's in there, right?
Mhm.
Um, the only line item that's not in there specifically is, oh, what does the loan officer make, right? So it's always been a little
Mhm.
bit mysterious, on the other side, wondering, okay, how do you guys make money? I mean, are you guys paid hourly? Are you guys salaried? Are you commissioned like us as realtors? Can you share some info about that?
Yeah. So I'm an MLO, right? So what that means is mortgage loan originator. So I have a brokerage that I work for, which we always think brokers are better, right? So we, Laura and myself, we work under a brokerage, and brokers can do more because we can work with more lenders, right? So we have a more vast, diverse products. Um, if you work with a bank, oftentimes you're considered a loan officer. You don't have to go through the same level of training. You don't have to go through the same level of licensing, right? But your pay is going to be different. And so what that means is that you're going to be looking at somewhere between 30 basis points to um, I would say about 75 basis points. And then oftentimes you also get a salary, right? And then you get minimum quotas that you have to meet on a monthly basis. So when you're working with a financial institution, such as, a credit union, a bank, oftentimes and I think the average person gets about 30,000 um, as their salary, and then they get the 30 basis points to start with. As they close more deals, then it increases over time. If they're self sourcing, what that means is, like, if they don't rely on the bank to provide them with leads, then they'll get that $30,000. But the thing is that the max the max compensation is 70 basis points. Now, I want to cover what basis points are, because I mean, I didn't know what basis points were until I was in the industry. So most people probably won't know what basis points are. Basis points are a percent of a percent. So that means that if you are, let's say, for example, the loan was $100,000, right? To make math simple, and you make 100 basis points. What that means is you make 1% of the loan amount. So that's about $1,000. So um, that's it. And the thing is that if you're only making 35 basis points, that means you're making $350, right? Plus your salary. So that's from a banking side. That's what you're going to be looking at. When you go into working with lending, like more broker type, like, so there's correspondent lending companies, right? Which is very similar to that of a bank, but it's not quite a bank, and it's not quite a broker either, because they don't do wholesale numbers. And you won't see the numbers, right? You won't ever see the actual numbers of how they get paid. But most of them, they work on 100% commission, so they get somewhere between, I would say, somewhere between 80 basis points to 120 basis points, right? And then when you're a broker, um, and you work for a broker, there are a bunch of different brokers out there. So for my brokerage, we do so it depends on what we can charge the clients, right? So usually on average, we charge 2.25. That's what we charge, just so that we can be super competitive in the market, provide better level um, of finances and resources, rates for our clients. And so we charge 2.25 from my company perspective, but the the loan officer only gets 1% of that. And then in addition to that, if we get one where we can't charge the full 2.25, and the most that we can charge is 1%, then they get 50% of the commission split. So if that makes sense. Now, if you go to some place like I believe there's a company out there called what was it? Expert Lending, right? That I used to be affiliated and it's still kind of semi-affiliated with. They'll allow you to charge up to 2.75, so 2.75%. And then you can actually keep the whole thing if you are the agent for them, right? So you get that whole thing, but then they have additional company charges that they charge your clients. Like they charge like a processing fee, they charge a loan transaction fee, and all of those adds up. For my company, we decided not to do that, and we decided to go ahead. And our operating cost is um, the difference between what the loan officer gets and what we get, and so that allows us to be able to be uh, competitive, as well as be able to provide the resources that we need to our loan officers. For example, none of our loan officers pay for any of the credit reports. But I think if you go to a brokerage where they allow you to get the full 2.75%, you're going to be paying for your own credit reports, your own CEs, and so on. So
Hmm.
hopefully that kind of gives you an idea of what you're going to be expecting loan officers get paid.
Yeah, that definitely helps. So, just to give a quick recap here. So, there's mainly two different types of LOs out there,
Mhm.
right? So, there's the retail side. Think about your banks, your credit unions, things like that. And then you have your brokers. So, your
Yep.
brokers are more versatile. Banks tend to
Mhm.
just have their lending box, right, for the borrowers, right? So they have a very specific borrower criteria. If your credit doesn't fit that box, then pretty much your pre-approval is going to be denied, right?
Yep.
So you can't get a loan. Now, if you don't fit that profile, then you would move on to a broker where they're a little bit more flexible because they have tons of different lenders, right? And so, like you said, if you are a retail loan officer, you don't have to have pretty much much training at all. Really, you don't have to do the federal licensing course and all that stuff. You can just go ahead and just start working as a loan officer. They'll train you, right? And
Yeah.
you're also able to lend in whatever states that bank operates in, right? Right, and then if you're a broker, you can only operate in the states that you have your license in. And then, of course, on the broker side, as Johnny mentioned, you can earn more than on the retail side, right? So, what is it, 0.3, 30, 30 bips, 30 to 70 bips, right?
Mhm.
So, what is that, 0.3% to 0.7%, right, of a loan amount?
Yeah.
Uh, Whereas on the broker side, you can pretty much earn as much as 2.75 points or percentage,
Mhm.
or 275 bips if you want to talk loan officer talk here.
Yeah.
But yeah, so loan officers earn based on the loan amount that they're issuing out, right?
Mhm.
So, um, so here's a question for you. You've actually been on the retail side and the broker side. Which is better?
Yep. Yep. Of course, the broker side is way more versatile, right? I think it's better because you can provide way more services to your clients. You have a broader scope. You have a better understanding, right, of how the business actually flows. And the honest truth is, we don't work like for our clients. It's better for our clients, I should say. It's way better for our clients. Yesterday, like today's Sunday, of course, right? Yesterday I had a client reach out to me and I was working on
Mhm.
his deals all day long, right? Where if you were working banker's hours, good luck. Like after 5 o'clock, they're done. Assuming they work on a Saturday, but they of course they don't, right? So um we're here, like I'm here, like I tell my clients, look, hey, if it's not midnight, feel free to reach out. Right after
Mhm.
midnight, that's kind of like my time period that I cut off. But anytime between like 8 a.m. and midnight, I'm open for business. And if you want to be outside of that, let's say for example, you want to work with me at 3 a.m. in the morning, we'll schedule it. And I
Okay.
mean, and I work around the clock, so we'll schedule it. If you're gonna try to call me at that time and it's not scheduled, you probably won't get me. But if it's scheduled, I will be awake and I'll have a conversation with you and accommodate to your schedule, right? So,
Okay. So
um,
I'm gonna
yeah,
schedule a 4 a.m. call with you. You know,
let's do it.
not for a loan though. No. All
Right.
right. So no, that's actually a really good point you bring up there. That a lot of loan officers that work for retail banks, they are only 9 to 5, right?
Yep.
And that
Yeah.
is that can be very frustrating. Delayed
Mhm, mhm.
responses, things like that. As a realtor, I've had to deal with that in my own personal transactions with past customers, and that's one of the hardest things to deal with. Is that I one time I called a loan officer right at 4:55, and it's a very important question, like where closing was like coming up, you know and she didn't answer the phone, but she sent me back
Mm.
an email saying, hey, it's 5 o'clock, I'm done for the day. I'm like, oh my gosh, like, do you not want to help your client buy a house here?
Yeah,
So very, very, very frustrating. I did call her manager. Had
of
a nice
course.
talk. But yeah, so anyway, let's move on to what's the wealth move for loan officers? How do they how do they go beyond just chasing loans?
Well, I mean, I think if you get connected, my thoughts are is that so if you get connected, you'll learn a lot, right? And I think one of the moves that you can do, like what I did, for example, I had moved from working in the retail environment to then working in a brokerage environment. And then I started my own brokerage, right? And now I have my own team. And of course, we're planning on expanding, right? And, if anybody wants to be on my team and be taught how to create a brokerage or be a part owner of the brokerage, we'll have those conversations, right? And as long as your business is producing a certain level of income, we'll make sure that you get paid on all the transactions when you bring people onto the team. So there's things that we can do to make sure that you get paid not only for your transactions but for the ones that work underneath you. I think that the reason I opened up my own brokerage is because if you went and worked with any other brokerage, it's really, really hard for you to develop a team where um, you have a bunch of loan officers underneath you, not just assistants, right? When some people when they talk about teams, they're talking about just having an assistant, maybe one additional loan officers to cover them on rates and so on. Um, and then it's just a team of maybe 3 to 4 people, right? But I'm talking about like a massive team. Like if you want a team of 100 people that can produce a ton of business, and you don't want to own your own brokerage, well, you can work with a brokerage like mine, and we'll figure that out for you. Same with, I think Nexa does something similar, right? Um,
Yes. Yep.
yeah.
Yeah.
So the thing is that if you're working with a large brokerage and you want to build teams and you want to build people who's doing the loans and then you want to just manage, that's totally possible as well.
Mhm.
And so that's one way that you can build wealth. The like others, like I guess my thought is that's the direction that I'm going with my company. Did you want to fill us in on what Nexa does since you're with
Yeah.
Nexa?
Yeah. I mean, it's very similar to what you just said, right? Um, essentially, Nexa is built on kind of they're the EXP of the mortgage world, right? So they adopted EXP's model, which is essentially a cloud-based mortgage brokerage company. But on top of that, they also allow you to build essentially your own mortgage brokerage underneath Nexa, right? And so when you join Nexa as an individual loan officer, you can also start building up your own team, recruiting loan officers, putting loan officers together um, as individual loan officers, or you can actually create an official branch, right? And so now you have a group of loan officers that are, you know, working loans together, helping each other grow business. And then, depending if you're an official branch, you could earn as a branch manager, you can earn BIPs, a small, commission portion off of every single loan officer that you're helping out. Or of course, Nexa has the revenue share as well. So every single loan officer that you partner up with and bring over, you're going to earn 10 bips on. So,
Yeah.
um, it's just another strategy. And because, so what Nexa does is they're going to handle the compliance, the support, the tech, all that stuff, all that back end stuff. They are in 48 states. So really just, another vehicle to speed and extend your network faster. So.
Yeah. And that's with just staying inside of the loan officer world, right? I think that, if you wanted to go outside of that, there's so much more, right? So for example, when you create your own brokerage, there's possibilities of owning your own servicing company, right? Owning your own processing company, owning your own underwriting company. There's so much that you'll learn by becoming a loan officer or becoming a mortgage loan originator under the brokerages. Your skill sets will improve, and as they improve, you probably want to expand in your business as well. And so there's so many opportunities with that. In addition to, there's opportunities with the ability to then work with real estate investors, and possibly just invest with them, right? uh, the hopes is that as a loan officer, you're going to make good income, minimum six figures, if you are really diligent with what you do and become, I would say the top 10% of loan officers out there. They probably make, well into the six figures. But if you're talking about, the average loan officer at retail shops, I think you're looking at making somewhere between, 60 to 80,000 a year. um you kind of see that. I think when I was doing the research, that's kind of where they stood out.
Got it. Okay. All right. So that pretty much covers like, the general loan officer stuff. This week we won't have a rapid fire session since we've already done that with you in episode 1. So
Mhm.
instead, I figured we have a showdown here, showdown discussion, right, between
Yeah.
realtors and loan officers, right? So there might be people out there wondering which profession is better in terms of, which one earns more money. So what do you think?
So they both have potential on making just a crazy amount of money, right? And
Mhm.
I think that, like both of us, we're mortgage loan officers as well as realtors, and we're both with EXP. And then you have, of course, we're with different mortgage brokerages, but um, both institutions that we're with, from the mortgage perspective, has unlimited earning potentials.
Mhm.
There's a saying in the business industry, when you're running your own business, and when you're a loan officer, you really are. I would recommend you consider yourself self-employed, even though you might be W-2'd at a retail shop, because you kill what you eat, right? So that's the saying: you kill what you eat. So meaning, not literally, but whatever business you're able to generate, whatever business you're able to find, that's where you're going to get paid, and that's how you're going to feed your family. And so, um, does one outweigh the other? I think in the beginning, I would say in the beginning, realtors will make out better in the beginning. And the reason I say that is because, and assuming you're 100% on both, 100% commission on both.
Mhm.
Um, The reason is because when you go and you become a realtor, there's always people looking to fulfill their dream and find a home. And as long as you can build a business, you're getting 3 to 3.3% per transaction here in the Twin Cities, anyways. I think every state is going to be a little bit different. And that's speaking on average, right? We're not saying that that's what the actual price is, because it's always negotiable, but it's going to be somewhere between 2.5% to about 3.3% on average. So, um, for loan officers, if you work at a bank, you probably won't ever reach those numbers. And if you work at an institution, like, meaning like per deal, right? So, if let's say, for example, you have 6 deals, and
Mhm.
each one of them were 100,000, and you made an average of 3% for each one of them, right? And you did 10 deals, that
Mhm.
would be what, 30,000,
Yep.
approximately, right?
Yeah. Yeah.
Am I doing
It's
my
not
math right?
I think that's right. All right. About
Okay.
3%. Yeah.
Yeah, 3% of 100,000, that's 3,000, and then times 10, that's, yeah, 30,000.
Mhm.
Whereas if you're a loan officer at a bank and you're only getting like 85 basis points, right? Um,
Not even
you're
that,
not gonna what was
right?
that?
Not even 85. You're getting like what, 60, something like that?
Right. 65 basis points or something like that. You're not gonna come close to what a realtor makes,
No.
right?
No.
So, like, for most people, if you're gonna start, I usually recommend that you start as a realtor, and I think that that's the better avenue. However, if you come with a ton of loan experience already, and you don't know how to do the realtor business, but you know everything about loans already, then, of course, go ahead and move towards the loan officer gig. We can help you out and get you to the right place. Even if we're not in your local area, there's ways to help you so that you can become successful. Um, but my thoughts are is that it's much easier to start as a realtor because you have family members that you can go
Mhm.
work with. Oftentimes, your family members are going to go to their local bank or credit union to get financing, and so it's going to be a little tougher as a loan officer. But the I think that both of them has endless potentials, especially if you want to go across um, multiple cities, right? I think you have endless earning potentials. Some of the things that we have at EXP allows us to earn money even if we're not doing the realtor business, right? Like for example, if all we were doing was putting on a YouTube channel and getting leads and then sending the leads to a realtor, we're still going to get paid on that. Where as a
Mhm.
loan officer, you cannot get that, right? The government doesn't allow for you to send referrals to another loan officer outside of your organization and expect to get paid on it. You're just not gonna. I mean, there's some crazy things that go on out there, but legally, if you're not a part of the other institution, you can't get a referral fee from them.
Right.
So I think there's a lot of benefits to being a realtor. Do you have any additional things you want to add on to that?
Yeah, yeah. So it is so retail loan officer. I've never been a retail loan officer, but I do
Mhm.
know obviously I've worked with a lot, right? And
Mhm, mhm,
one interesting thing is that yes, while they don't make as many bips, right, percentage on commission, they do have the benefits, right? Which it could be hourly pay, could be a salary, and depends, right, how much experience they have, things like that. Could be minimum wage plus commission, right? But could be 100K plus 50 bips on each loan, whatever, right? And so I think talking to some retail loan officers, some of them are very comfortable with that, right? Because
mhm,
they have that comfy salary coming in, whether or not they're closing deals. And so sometimes they're happy with that. And so that's cool. Nothing wrong with that. That's awesome, right? Um, and so they don't want to make that jump to become a mortgage broker.
mhm.
One other thing is because when you're retail and you actually have a retail office, well, you get walk-ins, right? And you get people who just walk in, customers, right? So that's one benefit. And to start off as a brand new loan officer, I believe it's really hard to get into retail, right? Not a lot of retail institutions will take you on as a brand new newbie loan officer, right? They want experienced loan
Correct.
officers to sit in banks. They don't want a newbie there messing up their customers' loans, right?
Mhm,
So that is a challenge too, right? If you're thinking about going that route. Um, but yeah, I kind of agree with you that in the beginning, realtors will probably make more.
mhm,
Like you
mhm.
said, right? You're working your SOI, your sphere of influence, right? Your friends, your family. You have to at least know one, maybe five people that are looking to do something soon, right? And then, of course, getting paid anywhere from 2 to 3% on that purchase price versus who knows, like 50 bips, 100 bips, even, which is 1%. 1% is a lot in the loan officer world,
Mhm,
right?
mhm. Absolutely, absolutely.
So, yeah, but initially, yes, I would say definitely realtors have the leg up, right? And so that's one of the things that as a realtor in the beginning, I always assumed loan officers only made 1% of the loan amount. So I was like, wow, well, I'm sitting over here. I can make anywhere from 2 to 3, maybe 4% as a realtor.
Yeah,
So
yeah.
why would I want to become a loan officer? That's why it took me forever to come over. And I didn't really know what was going on in the loan officer world. But actually, I'm an engineer, I'm an investor, so of course, money, figuring things out, having solutions to customers, right? Becoming a loan officer is just adding more skills to my skill set, right? And it's actually, as an investor, one of the biggest problems you have right away is, hey, how do I get my money, right? Um,
Yeah,
and as brokers, we have so many different solutions to offer clients. So that part is really fun. Now, long term speaking, what I can see long term uh, is that realtors, I mean, most realtors can only do business as far as they can drive, right?
true.
And right, so 1 hour max is most realtors' maximum distance that they're willing to drive for clients. Um, And so you become really limited on your time, right? We have unlimited both careers have unlimited earning potential, but you have the time factor, right? And as a realtor, you're constantly driving out there, right? And there's only so much driving you can do in a day and things like that, right? Whereas on
Yeah,
the loan officer side, dude, you're chilling in an office, home office, retail office, you're working anywhere with an internet connection, and you don't have to drive anywhere. You don't have to show any buyers any homes. Um, and the loan volume, right? I mean, obviously, it's going to take you time to build your business, things like that. All right. Either side, it's going to take time to build your business. But if you can do 10 loans a month or whatever, right? That's going to be crazy amount of income, right? Especially if you're in the broker side where you can make, 2 to 3%, whatever, right? So I think long term wise, if you can really master the loan officer gig and really like, have a ton of loyalty, customers, brand to use you as a loan officer, you build your brand out there, people know who you are, and you're the solution, expert, right? For their money problems, for their real estate problems, dude. It's game over. And the really cool part about the loan officer thing that my head would kind of exploded, my light bulb went off, was like, you don't have to drive, right? And so with that,
mhm,
you can also just get licensed in other states where the real estate values are higher. So the loan prices are going to be higher, right? So of course
yeah,
you're going to get paid more. And again, because you don't have to drive, you can work that state, you can work that city without even having a presence there, right? And that's really high level stuff, right? Because you're talking about random people who are going to use you who don't even live there, right? So that's kind of like the potential is really there on the loan officer side. I think as far as unlimited potential of income, I think it's higher there. The retail side is kind of yeah, yeah, the realtor side is, it's a grind. It's a grind, right? Loan
yeah.
officers.
I completely agree with you. I think that, on
Yeah,
the retail side, it's just so hard. It's so
it
hard
is.
for a loan officer to make a ton. The
Yeah.
only loan officers that I know in the retail side that makes like crazy money are the
Hmm.
ones that work in the wealth management divisions, right? They
Hmm.
get fed wealth management deals.
Hmm.
Say, for example, if you work for Chase, right? And I'm just
Yeah.
using Chase as an example. Like I've never worked
Hmm.
for Chase before, so
Right.
I wouldn't truly know. But say, for example, you work for Chase and you're a
Hmm.
loan officer, and they have a client that they've been managing all of their wealth and managing all of their bank accounts, and he comes in and he's like, I need a $5 million loan, right?
Hmm. Hmm.
And 30 basis points on a $5 million loan is not bad, right?
Not bad.
So
Yeah, I
if
know
if
someone doing
that's
that
the
right now.
case, if that's the case, then you're gonna do really well. But
Yeah.
otherwise, it's very, very difficult. When it comes to being in the broker world, I think it's pretty equal because like for us, as loan officers, I agree. For 2 years out of my life when I was working as a executive vice president and doing sales still, right? Meaning like I was I worked at the same time. I had a team. Um, we were closing tons of deals, like somewhere between 10 to 15 deals per month.
Mhm.
And when we were doing that, we were making killing. But guess what? I didn't leave my house. Like I didn't leave my house at all. Like, I just sat there all day at the computer grinding away.
Mhm.
Because it'd be, a call on with this person. Like, so how I managed it was in the 8 hours that I had, I talked to about, I'd say somewhere between 3 to 4 people an hour, right? And I did that for 8 hours and then we cut it off. And then the rest of the times I was organizing all of these deals for the underwriters, right? So,
Mhm.
or pre-underwriting the deal for us, the pre-approvals and so on. So that's what we did. And then, on the weekends, that's when I was really gathering all the information and making sure that the underwriters got what they need to be able to, get the deals closed. So it was intense. And could you do 10, 15 deals a month? Yeah, but you better have a good team. Otherwise, it's going to be
Mhm.
just chaotic. I can tell you that there were like 48 hours that I just did not sleep because all I was doing was working on these deals. So my thoughts are is that um could you do it from home? Yeah, absolutely. Could you do it from anywhere? Yeah, absolutely. But I really think that you can do that as a realtor too. And meaning like you don't have to be like what I was saying earlier. If you were the person that received the most leads, right? Or you found some kind of way to lead gen and bring in so much business from across the United States, you can divvy all of those out and you don't actually have to do the transactions yourself, right? And you're still getting paid. And that's
Right.
25% of 3% usually, right? Or an average of 3%, right? Say for example, they do get the 3%. Let's say and so then you can do like 50 deals, right?
Right.
If you're doing, and that's the same thing as in California, if you're
Yeah.
able to lead gen in California, where the average price might be 1 million, right? And you get
Mhm.
3% is that what, 30,000? So
Yep.
25% of 30,000 is $7,000, right? You get
Mhm.
$7,000 for handing off a deal. And if you can do 10 of those, right, a
Yeah.
month, that's
Not bad.
$75,000 a month. So I think realtors have so much potential, right? The question is just, are you going to get engaged, and are you going to be able to go and network, or are you going to stay in your own environment? Because if you stay in your own environment, I think that I think it's great. I think it's great that you stay in your own environment, that you work with your people, you get involved in the politics, you really support everybody, get involved in nonprofit organizations, and donate and help and all that stuff. And you're very, very community based. I think that's phenomenal, but I do think that you're going to be losing out on an opportunity to engage in the rest of the United States, or even the rest of the world. So my thoughts are is that if you're a realtor, expand your business and go out of your way to bring in the leads and really help people. Even if you're not getting the full 3%, there's a possibility that you can just make really, really good money. So
Oh yeah. Yeah. And you just have to change how you do your business, right? How you run your business.
yeah,
And of
absolutely.
course, the referral business that you're referencing, I mean, that's one of our guys that we're connected to. That's how
Yeah,
he operates
yeah,
his business, right? And it's amazing. It's a machine. He gets like 70 leads a month, um,
that's
all through YouTube.
crazy.
Yeah, all through YouTube. And the guy's only listed one house in his entire real estate career. uh,
That's so
so
good.
it's amazing. He's
That's
always on
so good.
vacation. Oh man, yeah, he's got like multiple condos, and yeah, I don't want to put out his business, but anyway, maybe we'll have him on next time. I don't know, in a future episode. But anyway,
Probably a good idea.
um, what's which is easier, do you think? Like if you're just solo, right? We're not talking about building systems, like which job do you think is easier?
Personally, I think being a realtor is way easier. Um,
Oh, really? Why is
you
that?
don't have to know that much. Like you finish your courses, you understand how contracts work, right? You understand how to negotiate, right? I mean, you can learn how to negotiate at a farmer's market, right? So
Oh,
at least that's just this is just I mean, this is my take, right? This is my take.
Okay.
And you go
Okay.
out
Yeah.
there
Go
and
on.
you get like people sign contracts, they want the house already, right? Their dream is to buy the house, and you're really selling the dream. So you're just helping them find the one that fits them best, that the one that's, you know, most appropriate for them. And of course, do your due diligence and make sure you actually know your stuff, right? Meaning like, you know, if something's really wrong with the house, you need to make sure your clients are aware of it, right? So you do the due diligence and you
Mhm.
provide them the best level of service. But it's they sign the contract, the seller signed the contract, then you wait for your lender, right? You don't really have to know too much beyond that. As a buyer's agent, as a listing agent, you're going to need to know more, right?
Really?
There's more. I think there's more analyzing behind that. Because you know, when someone wants to buy a house, sometimes it doesn't matter what the price is, right? If that is the house, if that is their dream house, they may offer some ridiculous price. And of course, the appraisers will come in and be like, yeah, that's not the right price. So we're gonna have you guys reduce it, right? But the thing is that they will buy it overpriced. I mean, we saw it during the pandemic, right? I seen people put 100,000 over the asking price on like a $700,000 house. They were buying it for $800,000. And the appraiser is like, yeah, we're not giving you an appraisal for that. The lenders can't lend all the way up to 800,000 on that value point. The house is only worth 700,000. They still came in with money and paid for it and bought it, right?
Oh yeah, for sure.
So
It was
yeah,
it was different times, man. It was different times.
right.
Especially
It was
COVID.
crazy.
Everybody, dude, houses were like a rarity, right? Everybody wanted one, right? And
Absolutely. Absolutely.
if I was
So
an agent, I was an agent back then, right? And it was
uh-huh.
kind of nuts. Like we thought the world was going to end. What the hell's going to happen to our jobs? And the complete opposite. Everybody wanted a home. Everybody wanted a home office. They needed a bigger house. And so, like you said, people were paying the appraisal gap, the difference, right? The
Yeah.
shortfall.
Yeah.
If it came in short, buyers like, nah, don't worry about it, seller. I got it. Cash. Here you go.
Yeah.
Go away.
Yeah.
Give me my
Absolutely.
house. And so that was nuts.
Absolutely.
But yeah, back to the question. It's interesting you said realtors have it easier, but me being a realtor first, I think the loan officer job is actually a lot easier. And I say that because on the realtor side, we're solo, right?
Mhm.
We're pretty much independent. They're, we're writing the contracts, we're talking to the client. Um, we're the pretty much that's why they call realtors rainmakers, right? They're the main contact, right? They're the
Mhm.
quarterback
Mhm.
essentially. Um, on the loan officer side, right? Depending on what type of loan officer you are, the setup, things like that, you are working with a whole support staff essentially, right? You have a processor that you might be sending your loan to, which will help you track
Mhm.
documents, request documents from your borrowers, things like that. And then you, of course, there's the underwriter. Underwriter is going to also be there to make sure that things are being followed correctly. The borrower is buying a property that's not a total disaster, things like that, right?
Mhm.
And the underwriters overlooking our jobs as loan officers make sure that we're running our calculations correctly, that we're pre-approving these buyers correctly. So there's a lot of checks and balances on the loan officer side. On the realtor side, not so much. I mean, if your broker is kind of like looking over your shoulder and micromanaging you, then okay, yes. But if you work for a small brokerage, or even sometimes some brokers don't even do a whole lot of anything really, they don't look at your file until you're about to go to closing, and then they start asking you about things. So that's kind of why I feel that the loan officer side, it's a little bit easier to run these transactions, right? And I know that you've mentioned that before when I told you that, and you're like, well, I do everything myself. I do my own
Yep.
processing. I do this myself. Blah blah blah.
Yeah.
Yeah, well, I don't. So,
Right.
so it's a little easier
Right.
for me. So,
I
okay,
I think
so
it's the for me, right?
uh
The reason I say that it's harder to be a loan officer is because you have to know so much, right?
mm,
Like, you have to know every product, every program, what
okay,
fits who. you have to be able to calculate income, right?
Mhm.
And for buyer agents, like you don't really have to know. The loan officer does the pre-approval. As long as they're pre-approved, you take them to go look at houses, you sign the documents, and then you're done, right? Once they close. So I
You're
mean,
right about that.
sometimes it can be that easy. It's not always that easy, right? It's not always that easy. But I'm
Well,
just saying.
when I was a newer realtor, I mean, before I became a loan officer, I would just pawn off buyers to my loan officer. I'd be like, "Hey, do you have a pre-approval yet? No. Okay. Do you have a loan officer yet? No. Okay. Let me give you a couple of my best loan officers, and I'll send you to them. Go talk to them and get pre-approved." So
Mhm.
I never cared to ask the questions. Hey, I never cared to get into their business. Hey, how much money
Mhm.
do you make? Hey, what kind of job do you do? Or how long you been there? Or do you know like do you have any debts? Things like that.
Right.
Do you pay child support? I never care to ask all these questions, right? To get up in their business. I just be
Right.
like, hey, go talk to my LO. He's great,
Mhm.
or she, and they will work with you to get qualified, right? And then from there, once you get your pre-approval, we're gonna go show homes, right? But
Right.
I did study I did do enough studying to at least know what programs were out there, right? Especially special programs, down payment assistance programs, things like that. And investors, right? I work with a lot of investors. So DSCRs, non-QMs. I knew pretty much a lot of programs because that's what I cared about, and I was trying to find solutions. So I wasn't just a realtor who didn't know anything on that side, but when it came down to actually qualifying people, I didn't really care to get involved with that because that's not my profession, that's not my expertise. So
Right.
I prefer to send it over to my loan officer to qualify them, because we don't want to do things that we're not licensed for, right? Um,
Right. Right.
Anything you want to add to that?
Yeah, I think my last note on that and probably leads into, what could be on the next topic that we're going to be talking
Okay.
about
Okay.
is, as loan officers, you have to know more, right? You have
Mhm.
to know so much more. Like you have to know the details of the client. You have to know whether they qualify or not. You can't put them in a house that they can't afford, right?
Mhm.
That's horrible business, right?
Mhm.
But
Mhm.
as a realtor, you don't know what they can and cannot afford. You get the pre-approval. Hey, it looks like they can afford it, right?
Hey, you
And
got $500,000 pre-approval here. Let's go get you 500,000.
yeah, there's ways to find things, as a loan, like when you go to the loan officer, like, so even if you knew, right? And I know that we had worked together for a little, or we ran across each other when you were a realtor only, and I was
Yeah.
mainly doing loan officer work only. Even though I had my real estate license, I was kind of part time in it. And when we were working together, right, or going over numbers, right, I know that you did your due diligence. And the thing is, Laura, like you're one of the when we worked with you, you were definitely one of the best realtors to work with from a loan officer perspective because you knew so much, right? But I'm going to be honest with you, 90% of realtors out there do not know that much, and it's okay. It's okay because your loan officer is going to help you through that process, right? But when I say lead into the next possible topic is,
Oh,
so
yeah.
are realtors are people who are realtors and loan officers better than
Right, right, right.
just people who are just realtors or people who are just loan officers? And I almost want to say, yeah, they absolutely are, because they understand both aspects of the business, right?
Mhm, mhm. Yeah. So, thanks for transitioning us into the next point here, which is, instead of being enemies, right? Let's be friends. Why can't we be both, right? So, um, is it you know is it possible to be both, Johnny? To have both licenses?
I mean, we're doing it, right? So
Okay, just say yes. All
it's
right. All right.
definitely possible. Not in
Okay.
every state. Not in every state. There's a couple of state out there. What was it? Do you
Well, no,
remember
no,
what
no.
they were?
I'm just asking to get both licenses, just to be licensed in both.
Yes.
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 All
You
right.
can definitely be
So the
licensed in.
next question is, can you represent uh, the same client as both a loan officer and a realtor and their buyer agent, essentially?
Yeah, then that becomes, there's a couple of states that don't
Yeah.
allow you to represent both. Minnesota allows you to, like, so I'm in Minnesota, right? And
Mhm.
here in Minnesota, you can be both at the same time. So you can
Right.
represent the client as a buyer's agent and be the loan officer. You can also be the listing agent and be the loan officer at the same time.
Wow. Okay. Okay. I
Yeah.
always thought that was a little bit dicey being the listing agent and also the loan officer for the buyer, right? And then
Doesn't
working with
it?
the
Doesn't it
buyer
sound a little
agent.
dicey?
It I mean, because now you're like, "Hey, seller, I know exactly how much the buyer is pre-approved for. Let's
Well,
counter offer this."
so I had a deal where I was the buyer's agent, the listing agent, and the loan officer.
That's wild. That's wild.
Yeah, and but, to be honest, in that deal, it wouldn't it would not have been possible without me.
Mm,
Like, it was literally not possible. The buyer went, got denied from a different, institution.
mhm,
The seller only wanted to sell it under certain circumstances. That was
mhm,
the only buyer that was willing to do those circumstances. It would've the property would have sat on the market, and let's just say if I wasn't involved, and the thing is that, look, everybody won out of that because they got so much discounts. Like, I gave them
mhm.
so much discounts,
Wow.
discounts on the listing side, discounts on the buying side, discounts on the loan side,
Mm,
so that the deal could be made possible. And the thing is that it turned out like phenomenal. Like, if you go back and you talk to those clients, I'm still friends with them, both of them, right? And so the thing is, and I like to be friends with all of my clients. Like, I don't believe in, I'm not a transactional person. I'm a very,
sure.
very
Relationship.
relational
Right.
person. Yeah. So I
Mhm,
care for every single client that I work with.
right.
And that being said, right, I still reach out to, all of my clients, and try to chat with them, or at least shoot them a text, and just,
Mm,
like, I know their birthday, so I can say, hey, happy birthday, or whatever. But the honest truth is that, like, when you're doing all of it, which it
mhm.
sounds crazy, like, I remember them asking me, "Wait, so you're gonna be the buying agent too?" And I was like, "Yes." And they were like, "You're gonna be the listing agent?" And I was like, "Yes." And they're like, "You're gonna be the loan officer?" And I'm like, "Yes." Because all of this has to be fully disclosed, right?
It does. It
Y- y-
does.
all of it has to be fully
As
disclosed.
long
And so,
as all parties are okay with it, right? They all
yeah,
know, that's fine.
yeah,
Um,
and I said, "Hey, you can go with anyone you would like,
right,
right? You
right,
can
right.
go with anyone you would like, and I have friends that I can refer you to. Like, you
Yes,
don't have to use me." And they were both of them
right.
were like, "No, we want to use you, because you're, like,
Mhm,
based on everything you said, all everything works really, really well. We've already tried going to other people, and it didn't work,
right.
and so that's why we want to use you." And
Yep.
so, it happy ending for everyone, right?
Yeah, yeah. So, yep, just to be clear, it is perfectly legal to be both the buyer agent and the loan officer in the same deal. As long as your buyer is okay with it, you've disclosed them, you told them that, hey, if you use me for either of these professional services, I can be compensated, right? And you make them sign that also you're not forcing them to use you for either one, right? They're free to use whoever. Um,
Mhm.
and so that's to cover your butt, but also on top of that, there's two states where it is not allowed to dual represent. That would be Louisiana and Utah. And also one other thing, your brokerage has to allow you to the ability to do that, right?
Mhm.
So in your independent contract agreement, your brokerage on the realtor side and on the mortgage side, they have to allow you to dual represent. And not all brokerages do, right? And I think one of your brokerages basically denied you that. And so that's why you left.
Yeah. Yeah, so actually, no names, right? Because the thing is, it was the specific broker, right? Because I
Yeah.
talked to the another broker in the same organization, and
Yeah.
they're like, "Why didn't you just talk to us? Why didn't you just come over? We would have we would have taken care of you. It would have been fine." So, I
Yeah.
think it depends on the individual broker that's running the brokerage. They felt like it was a conflict of interest. In some cases, it could be, right? There are people that will take advantage of people. I just so happen I'm not one of those persons, right?
Hmm.
And when you run across where you feel like you're being taken advantage of, you probably will want to try to go to another person to see if the offer is better, or if it's, like, if it makes sense, right? Or give us a call. We'll let you know if you're being taken advantage of, and if there truly is a conflict of interest there, right? I think if like, I probably wouldn't do one where I was related to someone, right? And then let's say, for example, I was related to I was the listing agent, and I was related to the person selling the house, and then
Mhm.
trying to be the loan officer at the same time,
Oh, sure.
or
Yeah.
being the buyer's agent. That
Mhm.
gets kind of weird, right? And even though you might not have any bad intentions, there could be a just a thought that someone might, and you just don't like, we don't want to do bad business. And
Right.
so, of course, we try to stay clear of those things unless they absolutely have to use you, meaning like they feel like you are the best
Mhm.
that's fitted for that position, and there's no one else that's able to do it. They've already checked around, and for some reason you have the skill sets to be able to make it happen. Then maybe, right? Maybe.
Right. So, we're talking about doing both, right? I mean, to get both your licenses, right, it's not just for the purpose of so you can just run around as a professional and always try to double dip every time, right? As
Mhm.
as the buyer
Mhm.
agent and as the loan officer, right? That's not the main goal, right? There's so many other benefits to just having both licenses, right?
Mhm.
Um, and sometimes when you do act as both, there are agents on the other side, the listing agents out there that they might feel a little bit salty because as the buyer agent and the loan officer, they understand you're going to get paid twice in this transaction, and they're only going to get paid once. So
Mhm.
sometimes they might be contentious with you, right? Um,
Yeah. Yeah.
it does happen, but there are a lot more perks to having your license, and that comes from the skill set, the knowledge base, right, of being a loan officer. Now we're able to serve our realtor clients pretty much on a whole different level, a whole different spectrum. That, like you
Yeah,
said,
it's holistic is what it
yeah,
is. Like,
yeah,
you got the whole gamut, right?
right. And whether they're going to use you as the loan officer or not, right? And when they're talking to their loan officer, I mean, of course, we're not going to step on their toes or anything like that. But
Mhm. Mhm.
we don't want to be that type of professional that talks, steps on other people that they're working with. But if they have questions, we can advise, we can pretty much explain it to them that, hey, this is kind of what they're talking about, right? Um,
Yeah.
and that happens a lot in our business, right? Where our clients are confused by what's going on in the loan. And then, especially as an agent, you who has no understanding or very little understanding of the loan side, you might not be able to answer that, right? But
Mhm.
now, if
Mhm.
you're a dual licensed professional, you're able to, like, yeah, I know what they mean. Here's what they're looking for, right? Um, so, and the sad part is that we are able to see, like you talked about, people getting taken advantage of, right? Um,
Mhm.
Now that I'm a dual licensed professional and I fully understand how to read a CD now, and how much fees, earnings that the LO or the other lenders taking from them, and the rate and all that, I can pretty much look at that and say, is that a fair rate? Is that a fair is
Mhm.
that a fair fee? And yeah, it's kind of crazy that some buyers out there, they are getting taken advantage of, right, by other lenders out there. So that's just one of the things, right? What other advantages, benefits do you think having
So
both?
there's a few benefits that, like, people that have used me,
Mhm.
um, like, are able to talk to me about both skill sets. Like, so for example, like, when realtors come to me, they like, some of them are worried, right? They're like, "Hey, are you going to steal my client?" And it's like, "No, you're under contract, right? You're under contract. I'm not going to steal your client.
You
Everything's
have
going
a
to be
buyer
fine.
agency.
In this specific transaction, right? In this specific transaction, I am just the loan officer. Yes, I have if the buyer asks me clients, or if the client asks me questions about the transaction from a realtor perspective, usually I'll refer it back to you. But there are cases that I might just answer him if it's for their benefit, right? I might just answer them. And if I ever say anything wrong, I just need you to communicate that with me, right? But for the most part, I stay out of the realty perspective, and I tell them to reach back out. And usually, like if you talk to the loan officers or the realtors that I've worked with, right, that I've been the loan officer on, they're like, Johnny, like you're amazing. Like you make this process way smoother, right? And vice versa, right? When you're the realtor and you're working with a loan officer, and they're like, you can call them up and be like, dude, what's taking so long? Like, is there anything I can help with? Because I know these clients really well. They'll say, well, we're running into this issue. And you can be like, okay, so I understand this business. Have you tried this, right, to solve the issue? Have you talked to the underwriters about this specific situation? Because I think if you did, it would solve the issue. And they go and they have that conversation, and boom, the problem is solved because you're in the industry and you understand. You can help make the process way smoother, right? And we're not here to, like, I'm not here to take deals from people, right? There is so much business out there, right? I have an abundance mindset. I'd love to work with you, right? Whether you're a loan officer or whether you're a realtor, because I believe that there's so much business that like we could take a larger share of it out there. Like I think in the Twin Cities, there's like 3 million people, and like there's 40,000 transactions that happened in 2024, right? 40,000 transactions. Dude, I can't do it. I can't do 40,000 transactions by myself. That's crazy. That's insane, right? And so even if I had a large organization, that's still a ton. Like I think most teams of, like, let's say 200 people could only do like 200 per month, right? And if you
That's
look
a
at
lot.
that, that's 2,400 transactions a year. 2,400 transactions a year maxed out, and there's 40,000 transactions happening in my city. I'm sorry, like there's there's way more ways to get business, and working together to succeed will just make us better and make us stand out. And I think that, being a loan officer and a realtor, the reason that having both of it is a benefit. It's not only a benefit to your clients, which it's a ton of a benefit to your clients simply because you just know more. Secondly, it's a benefit to the cohorts that you work with, like all of the loan officers, all of the realtors. You can help them communicate. There's been, like, I have a specific realtor right now. He's like, Johnny, I know you're a realtor too, and we're just using you as a loan officer, but I need help with this negotiation. Like, what do you think about this? And I'm like, so this is how I would approach it, right? And they're like, oh, that's a great idea. We're going to move towards that direction. And look, and he's with a different brokerage. He's not with EXP, right? And I'm still helping him because that's what we do. We better
Right.
people. And I think that there's so much benefit to it, for those that are, in one or the other business, and you guys want to, join us and do both. Look, I think Laura and I, like, I don't know, Laura, you can answer for yourself, but we're here to help. We're here to help. If you want to join us and be in
Yeah.
both, we'll help
Yeah.
you through that process. But just make
Yeah.
sure your ethics are there. We're not here to, mess with other people's businesses. We're not here to cause commotions or take advantage of people. We're here
Mhm.
to really, really help everyone, right?
Right, right. No, I think it's 100% what you said, right? And when we're in a deal, whether as the loan officer or working as the real estate agent, whoever's on the other side as the counterpart, we're working together to help our common client close that deal, right? Um, and sometimes it is very beneficial, like you said, to have both sides of the knowledge. Um, and to help the other person, right? So, like, for example, I had a recent deal where I was the realtor and the client, already had found this loan officer. Uh, Turns out, we had the house locked up, we had the appraisal done, and then all of a sudden, oops, loan officer messed up the application. Um, all of a sudden, down payment requirement went from 10% to 15%. My
Ouch.
client's freaking out, like, where am I going to find that extra 5%? And, luckily, I didn't go around blaming, pointing fingers, and didn't do any of that. I said, okay, well, you know what? Let me help you figure this out, right? So I said, hey, you know what? The appraisal value came in like X dollars higher than um, your purchase price. How about this? We talk to the listing agent, right? I'll go up to bat for you, even though this wasn't my mistake, wasn't my mess, but I have to go talk to the other listing agent now and tell them what happened and offer them this potential solution and see if their seller's willing to be on board with it, right? Which was, hey, let's redo the contract, let's do an amendment, let's do the purchase price, increase it by whatever the difference was in the appraisal value that came in higher. And then if they're really nice, can they give us that money back to the buyer at closing as a closing cost credit, right? So that would help him with the down payment. And I asked the listing agent, and listing agent was like, "Hey, the goal at the end of the day is to get this deal closed. So I'll go up to bat for you too." And I was like, "All right, awesome, appreciate you." And the seller's like, "Hey, cool, let's do it." And we went back to the loan officer and we're like, hey, we found a solution. Here's what we're gonna do. And then of course, the loan officer finished it up. So we, everybody was happy at the end of the day. Closing happened, clients got the house, so everybody's happy. But next thing, of course, if you want to get started in either one, last question here, which is cheaper to get started in? What do you think?
Um, that's actually a really good question. I think I almost want to say that becoming a loan officer might be cheaper. Um, Simply because you take the test in your state, and after you take the test in the state, you jump on with a brokerage, right? So you have to pay for your tests, you have to pay for the education, right?
Mhm.
And we have discount codes for different things, right? So if you guys ever want to do this, we have specific schools that we use, and you can jump on, you can learn, you can become a loan officer for probably significantly cheaper than if you were to try to become a realtor, because when you're becoming a realtor, you have all these systems that you have to pay for, right? So an example is like you got to pay for, of course, you got to pay for the same thing, right? The education, the licensing, right? Then after you get licensed, you got to join a brokerage. Then you got to pay those brokerage fees. And in addition to the broker fee, you got to pay for the MLS, right? And in addition to the MLS, you got to pay for the monthly subscription to be able to unlock houses, get the codes, and then you got to pay for like it adds up, right? It adds up. And I think that, like on average, I think I pay about $3,000 a year in realtor fees, where it's probably
Wow,
half of that for my MLO position.
dang, it's pricey up there.
Yeah. Yeah.
um,
Right.
yeah. So yeah, you're right. You were right. It is cheaper to be a LO because I just recently became an LO, right? So,
Mhm,
and I was thinking about the cost, the initial startup cost, right? So,
mhm,
roughly to be an LO, your total cost, you're looking about 1,000 to 1,500. Maybe 2,000, depends on your state. If they require additional education, things like that. Um, but the main savings comes from not having to pay for all those extra associations, right? So
mhm,
meaning that the you have to join the state realtor association, you have to join the local MLS in order to have the MLS, and then of course you have to join the national association of realtors, and so you're paying so many fees here. um, the initial startup cost, if I remember correctly, when I first started as a realtor, it was probably around like 1,600, maybe 2,000, maybe about 2,000 when everything was said and done. So it is a little bit more expensive to become a realtor, the initial startup costs. I just got my renewal letter for the realtor side, um, roughly about $1,000. So annually, about $1,000 as a realtor. Um, Now, annually on the side as a loan officer, it's still significantly cheaper, right? A couple $100 to renew your state license.
Yeah, that about sums it up. Yeah, it's
right?
yeah, you pay for the renewal, you pay for the CE, and
Hmm.
that's probably it's under 500, right? It's
Yeah,
definitely under 500 where
but it depends how many states you're licensed in.
I think even if you were licensed in many states, you're probably
Uh-huh.
still gonna be right around that $500 range,
Mm.
right?
Per each
Max.
state.
Well, so, like, I used to be for, like
Uh-huh.
no, like, so the programs that we use, right? The CEs that we use,
Okay.
like, because 'cause you're gonna be paying for every, every license. I think
Yes.
when I was licensed in, like, 12 different states,
Wow.
and I've isolated my business down to 2 states, right? Minnesota and
Yep.
Florida. But
Hmm.
when I was licensed in 12 different states, I think it only came out to maybe, like, $1,500, right?
Oof, not
That's
bad. Not bad.
education's cheap, and then you gotta pay for each license, and I think my most expensive license was in Montana.
Wow.
For some reason, they were more expensive than everybody else that I had a license in. I think the next closest one was California, right? So, um, when I was licensed in those 12 states, yeah, it was a little bit more expensive, but most loan officers are also focused in their state, and so it depends on your state fees and how your state does business.
Hmm. All right. Yeah. So good to know. And like Johnny said, if anybody's interested in becoming a realtor or loan officer, definitely feel free to reach out to us. Um, our emails, if you want to email us, Lore at ninjawealthexchange.com and Johnny at ninjawealthexchange.com. We'll definitely hook you up with those discount codes for realtor courses or loan officer courses, and be happy to talk to you about the process if really interested in getting started in the business here. And of course, we're not afraid of competition, right? Because again, we have a abundance mindset, so
Mhm.
yeah, we're not worried.
Yeah.
Anyway, so that's pretty much the show for this week. Hopefully it was interesting. We ran a little bit over the hour that we usually go, but we prefer to actually, finish talking about the important points that we want to get out there rather than time based. But so now that loan officers do a whole lot more than just paper pushing, right? So
Yeah.
next week, if you want to tune in, we're going to have our very first guest on the show. I'll let Johnny talk a little bit about his background, but essentially, it's going to be about how to save taxes for this calendar year, right? And we only have 3 months left in this in the year here, right? So if you want to make some moves to reduce your taxes for next year that you're going to end up paying, now is the time to take action. So, Johnny, anything you want to mention real quick about Chris?
Yeah, so Chris is definitely an expert. He's been in this industry um, for quite a while, right? If you can go on LinkedIn and search up his name, and you'll probably see how experienced he is. He has a ton of experience. I've worked with him in the past when I was in a previous employer. And what he does for us is he talks to our clients and he gets them into the right position. I don't think he does that anymore, but his businesses probably do it for him. But he's an expert in helping you lower your taxes and also be able to do your taxes correctly, right? He has this organization called Teaching Tax Flow, and what it really does is it breaks down what you should be doing to make sure that you're benefiting the most out of doing your taxes, as well as you're paying the correct taxes so that you don't get in trouble, right? So it's like super expert, someone that like I've known for a little bit. I think that like you don't want to miss out on this, right? You do not want to miss out on this. If we have enough time, we probably would do some Q&A. And the thing is that Chris is an expert in this field. Like he's a CPA, he has an MBA in accounting, yeah, he's a PFS, right? So CPA, certified public accountant, MBA, right? Master of Business Associations in accounting, right? And then the PFS, I believe that's I can't remember what that stands for exactly. I could probably look it up real quick, but
He does everything, man. He got a lot of acronyms after his name. He's also a
I mean,
professor, right? And then he's also a podcaster.
exactly.
So
So
the
he's
guy,
got a lot going on. Yeah,
yeah,
the dude is super intelligent, and so of course we want to welcome him. And when the this coming next week, I think you guys will love next week's podcast for all of those who are, whether you are in real estate, whether you are not in real estate, like doing just regular business, you're gonna want to hear this information, right?
right, definitely. I mean, it doesn't matter. As long as you got a tax problem, which a lot of people, mostly everybody does, right? Everybody wants to save on taxes. So, whatever you're doing, W-2, high income earner, self-employed, you run a business, right? The stuff that he's going to be talking about is going to help you out. And if you're interested in building wealth, one of the biggest things is, um, figuring out how to keep as much as you can, right? So that's it.
Yeah.
All right. Thanks for joining us.
In
Oh, you want to say anything else?
real quick. PSF stands for Personal Financial Specialist, right? And that's
Oh, okay.
from FINRA, right? That's a definition from FINRA that basically says that they have a professional dedication or designation that tells you that they're better than everybody else. So,
That works for me. That works for me. All right. Thanks, Johnny. I'll see you again next Sunday here, and catch us if you want to learn about tax savings. So,
sounds
peace.
good. Later.